Today is Monday, January 6th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Happy New Year, guys.
Happy New Year.
Starting with the financials this morning, Alan. Looking at the dollar and the foreign currencies in particular, what is the current outlook for these markets in 2025?
Okay, well, the dollar index is under quite a bit of pressure today, but it did fall from the recent two-year highs. So I think today is a situation that is only likely to be temporary as far as the pressure in the dollar. In fact, today's decline due to reports that the new Trump administration is considering softer tariff measures. So this was the catalyst for today's flight to quality long liquidation in the dollar. So I think this is a buying opportunity since the Federal Open Market Committee is still on a track to lower interest rates, but probably not as aggressively as other central banks, such as the European Central Bank and the Bank of England. So interest rate differential expectations remain very favorable to the long side of the dollar index. Keep in mind that in the Eurozone, we have political problems in Germany and France. Also in the UK, some problems as well from a political standpoint. So what really counts is the interest rate outlooks for these regions. And that suggests the dollar will rebound from this pressure. Higher prices are likely longer term for the dollar, lower prices likely for the euro currency and the pound. And I think it's not just the euro currency and the pound. I think all other major currencies against the dollar will tend to soften.
Perfect segue to interest rates, Alan, particularly the 30-year Treasury bond futures. What's your price outlook there?
Okay, well, first of all, the front end of the curve is holding up very well, but the long end, in fact, 30-year Treasury bond futures recently fell to new lows for the move. In fact, even today, the March bond futures falling to the lowest level since November of 2023. So I think there will be more pressure on futures at the long end. So any rallies probably should be used as selling opportunities just for the bonds. But futures at the short end, I think, will hold up relatively well since the Fed is still on track to lower interest rates, even though it may be only one or possibly two times. It's the long end of the curve futures that are likely to suffer.
Lastly, Alan, what major reports are traders looking at this week?
Okay, well, Tuesday we'll have the December ISM Services Index guessed at 53.2. Wednesday, the minutes from the December 18th FOMC meeting. And then on Friday, probably the most important report, that is the employment numbers. And right now, the December non-farm payrolls report is expected to show an increase of 157,000.
Thanks, Alan. Shifting to the grain markets, Mark, can you give us an update on the crop in South America and the weather outlook down there as well?
Yeah, weather in South America just continues to be the main driver of price action across the agricultural space. In Brazil, much of the central and northern growing regions remain in very favorable conditions as rains have been plentiful pretty much throughout the growing season. Well, harvest is underway for a very small portion of the crop. We're really about 2 to 3 weeks away from harvest really starting to accelerate in Mato Grosso, which is their largest producing state. As we move south, however, conditions are not quite as favorable as drier conditions and now some heat from southern Paraná all the way south into Rio Grande do Sul may threaten yields for roughly 15 to 20% of the country soybean area. Despite this concern, a record soybean crop and potentially record yields is still expected for Brazil, given the strength of the crop in the north. In Argentina, however, we've seen some beneficial rains in the northwest and the southwest growing regions over the past weekend, but much of the main producing areas in the central part of the country remain in a hot, dry pattern, which is causing a rapid drawdown in soil moisture. And if this pattern looks to hold through beyond the middle part of January, we really could be starting to see it take its toll on the crop. Right now, I think just the day-to-day volatility on these forecasts will really drive prices in the ag space here through at least the middle to the end of this month.
And Mark, we do have a USDA report this Friday. How important is a report, this time in the beginning of January, and what are your expectations?
Yeah, typically, winter reports are not that critical to price direction. I think this one is the exception. However, we get a lot of data out on Friday, final production estimates from last year's U.S. corn and soybean crops. We get our first look at the new crop winter wheat acres, along with stocks as of December 1st. And of course, we also got the WASI report where we factor in the demand side of the equation and South American production estimates as well. So my expectations, just sticking in South America, I don't see any changes in the Argentine crops just yet. Expect the USDA to stick with a 52 million metric ton production forecast in soybeans and 51 million metric tons on corn, basically choosing to wait to see how this dry pattern plays out over the next a month or so. And in Brazil, I do look for the USDA to raise their soybean production estimate roughly 2 million metric tons to 171 million metric tons, but keeping their corn figure unchanged at 127 with the second crop, the most important there, and that doesn't get planted till after the soybean harvest. In the U.S., I look for the USDA to lower their corn production forecast. I've got them down 48 million bushels to just under 15.1 billion. Still a record yield, however, at 182.5 bushels an acre, down from just over 183 in November. I've got DS1 stocks at 12.16 billion bushels. Down ever so slightly from a year ago. And I've got the ending stocks dropping 73 million to 1.665. That the only change on the demand side I see is a 25 million bushel increase in the amount of corn used in the production of ethanol. And beans, I think the USDA slash production 121 million bushels in November. I see a little bit of an uptick there. I've got production at 4.48 billion, up 19 million. Average yield just over 51.9 bushels an acre. I've got DS1 stocks at 3.256 billion, well above the 3 billion from a year ago. On the demand side of the equation, my only change there is a 10 million bushel increase in crush. And with the increased production and the other usage changes, I've got ending stocks up 15 million to 485. And finally, in wheat, I've got DS1 stocks there, 1.573 billion versus 1.421 a year ago. I've got ending stocks dropping 10 million bushels to 785, slightly higher feed usage as that price relationship versus corn has shifted quite a bit down for the wheat. And I've got winter wheat acres at 32.7 million. That's down nearly 700,000 from a year ago. And if realized, that would be the lowest in 7 years for the U.S. winter wheat acres.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.